What's up, you guys? Welcome back to WIDEBODY Nation. We've got a problem here, folks. You guys remember the housing crisis back in 08, 09? Well, it's about to be the auto loan crisis of 22-23 because, as you guys know, the economy is on ice right now. Gas prices are way up, and there's a lot happening under the surface that you guys need to know about to make informed decisions on what you want to do for your next car and life decision. So in this video, we're going to be talking about the auto loan bubble. It impacts you if you own a car right now, whether it's on a loan, a lease, or if you own it outright, or if you're in the car market, or if you're just a car enthusiast in general, because you're going to be seeing a lot of changes in the car market over the next, I'd say 3, 6, and then about 18 months. There's different things happening over the different time horizons. So with that being said, quick announcement. We just brought on a new sponsor, which is my pre-workout that I've been using for, I guess, 4.5 years now, and that is Bucked Up Sups. We brought on, this is my personal pre-workout, this is literally open. I usually use WOCAF to work out, but we brought them on. I love bringing on sponsors that I actually use. You know, we have the theft deterrent strap that we came up with because my car was stolen. We have my favorite pre-workout on here, and you guys know that I only really like to have sponsors that actually use their products. So check out the link below. It's 20% off using my coupon code, and if you guys have any questions, comments, concerns on pre-workout, workouts, my wife's about to be a dietitian. I got a lot of not advice, but opinions to share with you on that. So check out the link below. Also in the pinned comment if you guys are looking for some supplements. With that being said, back to cars, because that's what you guys are here for primarily. If I can refer to another channel real quick, I like to spread the love. This guy already has more subs than me, so it's not really me doing him any favors, but Lucky Lopez here, he is very entrenched in the car industry. He has a lot of information on car buying, car selling, dealership stuff. Like, if you guys want to get a pulse on the overall car market, very unfiltered, I would hit him up, subscribe to him, and that's the plug. Now, why are we talking about repos and just the car market in general in this video? Well, I still have a house, believe it or not. I am in a tent right now. It looks like I'm in jail or something. But I'm doing some army stuff, so that's why I'm out here. But I'm still bringing the videos to you guys. Repo rates are already climbing in the United States. The government's worried, dealerships are worried, banks are worried, customers are worried, because repos are not the worst thing ever when there's only a few of them on the market. Like, when only a few % of people's cars are getting repossessed, it's not a massive detriment to the whole market. Obviously, it's a significant emotional event for those involved. But if that bank can repossess the car and then sell it at auction for a fair price, everyone kind of comes out banged and bruised, but not totally destroyed. What you guys are about to see happen in the next 3 to 6 months is the repo rate is going to potentially double, triple. The possibilities are kind of endless because there's been 3 major issues with the car market. So you guys already know that inflation is a big thing, whether it is, whether it's house, whether it's, rent, mortgages, cost of a house, cost of car, cost of any asset really, cost of steaks, cost of gas. So inflation is one problem. The loans themselves are another problem. And then a change in relative income is kind of the third major issue that we're running into here, which, obviously all 3 are kind of interlaced, but this is important because if you may want to look at what your car situation is, because I have multiple recommendations that are not just negative. It's not just trying to prevent you from getting screwed. I could be helping you, make money while you can, rather than having to sit on a car for the rest of the car payment, whether that's 4 years, 5 years, 6 years, or however long. So let's talk about inflation in general. So a lot of us bought cars a lot of us that have bought cars over the past 2 years, 2.5 years, let's say basically from mid 2020 until now, so that would be 2 years, either paid an okay price or probably more than we should have. Now, if you guys followed a lot of the stuff I say on the channel where you used your trade-in, maybe you got an awesome trade-in value and that helped you on taxes, maybe you're sitting better. But one of the problems that we have seen is that cars, you guys remember the commercials. Dealerships used to have to, dealerships and manufacturers used to have to run commercials saying, oh, you have $8,000 off this GMC Sierra, finance for 0% for 72 months, and the cash off offers more or less went away about a year into the pandemic. And that is because they realized that demand for cars at that time was so high that they could sell cars for MSRP or more. And you guys saw that. Scat packs, Hellcats, Corvettes, normal, diesel trucks, Hyundais, Kias. I saw some Hyundais, like the new SUV, I think, or the Kia Telluride that looks a little bit Range Rover-y. That thing was selling for $5 to $10 grand over, which is crazy. That's a Kia. Kias catch on fire on the side of the road. They don't sell for 10. That's just bananas. But inflation. So the first problem is that people, if they didn't get a good deal, they either paid an okay price or they paid way too much money for their car that they currently have right now, right? Now, 4 or 5 months ago, that wasn't a problem because they probably actually would have had a car that was worth more if they would go trade it in. Now, that was the problem up until about now, is that, I was telling people, hey, go trade your car in ASAP, especially if you're upside down on the loan. In a previous, pre-pandemic, if you were upside down on the loan, chances are you're not anymore because the used car prices were so high. But now used car prices are starting to peak. They're starting to peak. And if we don't decide what you're going to do now, whether you're going to keep the car, sell it, trade it in, whatever it may be, you're just going to have to be stuck with it probably for the next 5 years or however long your loan is at least. So, a lot of people bought cars for more than they are going to be worth very soon. And that's where we get back to the upside down on the loan thing, where at the time the loan might have been an okay loan, but car prices, due to repossessions, due to increased amount of cars on the market, the supply side is catching up. There is no longer as much of a microchip shortage. I would say as much because I'd still say there are supply chain issues, it's just not as much. Go look around, your dealership lots have more cars. The supply of cars has gone way up compared to where it was 5, 6, 8 months ago when there was no cars on Subaru lots. Toyota lots looked like used car dealerships. Honda lots were crazy. So notice the difference, plus, with gas prices up, with everything costing more, and with a lot of the stimulus money running out for a while now, there is a lot less money flowing around the market, and interest rates have basically doubled. So, for instance, just use mortgage rates as a barometer. 8-9 months ago, when we were in the housing market, the rates you were talking in the low 3s, maybe even high 2s for a mortgage, for a 30-year mortgage. Now that is basically doubled in the course of less than a year. Same thing with auto loan rates. Now, auto loan rates, I wouldn't say have necessarily doubled, but based on your credit score, you might have gone from being able to be approved to not be able to be approved. So the auto loans that were given during the pandemic were very, very, very loose, and they were given for cars that were much more expensive than they will be very soon. So we talked about inflation and how that's kind of setting, the reason I talked about first, because that's kind of setting the condition for the problem that you guys are going to be seeing with repossessions, with more supply, with less demand, and a few other things that we need to talk about. So let's talk about these auto loans specifically. banks, you know, banks were making auto loans like banks were making making mortgages back in pre '08, right? They very little proof of income, very little proof of residency, very we'll call it due diligence, right? Very little due diligence, which is basically them saying, hey, F it, here's the money, here's the car, and I hope you pay us back. And oh, by the way, we'll finance it's called a loan to value ratio. We'll finance way more than the car is worth. So say you were talking about a $50,000 Scat pack, but you were negative $5,000 equity on your trade-in, so they would finance $55,000. Plus, you wanted to add an extended warranty, and you wanted to do a zero down payment, and you had to pay that. You wanted to roll the taxes in there. You could have been financing $62,000, which is 130% loan to value, because that's the quantity of the loan, which would be say $60,000 or $65,000, to the value of the vehicle, which at the time of purchase was $50,000. And at the time of purchase might even have been a little higher, but now with these repos, with the extra supply on the market and with less demand, these dealerships cannot charge, and with these gas prices, a lot of these gas guzzlers that were previously very sought after when gas was cheap are becoming less and less sought after. So these car loans were made aggressively. Now, they were made at relatively low interest rates, I will say. So that is the one redeeming, I would say slightly redeeming quality of, if you're looking at yourself right now and you're like, oh, I kind of got taken for a ride on this loan. Like I got, I took a loan out, 60 grand loan out for a $50,000 car that might only be worth $45,000 or $40,000 now. Yes, that is not ideal, but at the same time, maybe you got a 2% interest rate instead of getting a 5% interest rate, because if you were to look at getting into a car now, whatever your interest rate that you got back then, unless your credit has drastically went up, then it's probably going to be a worse interest rate now than it was, 6 months ago, 12 months ago, 24 months ago. So these auto loans are concerning, which then bleeds us into kind of like budgeting and a lot of changes unique to basically right now. And again, these all kind of morph together, but they're very related, so that's just how I kind of broke it up. And we're getting to my recommendations after I turn this last corner on this third point. So these banks, these dealerships, and the customers, the people who have these cars, went out and got these loans during the pandemic, presumably, or right before the pandemic, maybe when they were crushing it with their business or whatever it may be. Now, during the pandemic in the last 2-3 years, gas was $2, $3 a gallon, and now it's $5 to $7 a gallon. If you're in California, RIP, I've seen gas stations there that are like $9.99 a gallon, just because I guess they want to be the highest in the nation or something. That has wrecked people's budgets bad. Rents have gone up 20 to 50% over the past year or two. Gas prices have doubled. Food prices have basically doubled. People's salaries have really not gone up that much, comparatively speaking. I know everyone's like saying they're getting like they're everyone was hiring and stuff, but let's be honest, salaries have not kept up with inflation, if we're just being 100% honest, unless you just got a massive bonus or a massive job change. So again, we're getting into the repos. People will either be trading in their cars, selling them, or their cars will be getting repossessed because they'll just walk away from the car, potentially either willingly or unwillingly, and it's flooding the market. That's why I reference you guys to Lucky Lopez over here, because he talks about that so much. Now, I don't really want to bore you guys anymore with any stats, so let's just get into my recommendations. If you guys are kind of like, let's say you're kind of sketching on where you're at with your car, whether that's due to like your current budget or whether that's due to job instability or family medical issues, whatever it is. If you guys are feeling sketchy, you guys, I would say, have about a month month or two to go try to trade your car in, and ideally trade into something much more affordable if you need a car. Now, if you don't need that car, I would say just try to outright sell that vehicle to a dealership that is still hurting for inventory. So I've said this a bajillion times. I text it to people, I message it to people on Instagram who hit me up directly, and you know, the best way to try to get the best trade-in value is to go look around and see which dealerships' lots are still pretty empty, because chances are those dealerships are going to auctions and trying to get cars to sell because they got to move metal, and they are not able to buy cars at a fair price at auction. They would rather buy it off you for a decent price than go to auction and get hosed, because auction prices are still too high right now. So I would recommend either selling or trading and downsizing, downgrading, getting more economical with your car purchase, especially taking into account that gas is more expensive, car insurance is probably more expensive now, etc., etc. If you are looking at the market more as an enthusiast or as an investing person, like say you're trying to flip cars, say you are trying to do other things in the market, it's going to be interesting to see what happens to collectible cars, what happens to popular cars, the Ford Bronco or the Z06 Corvette or the Hummer EV. Some of those cars I think are going to be pretty insulated from the upcoming turbulence in the auto market, because yes, there's a lot of macroeconomics going on with supply and demand of the general car market and repossessions and interest rates going up and et cetera, and just loans getting tighter. But certain cars like the Z06 or like the cool the Bronco Raptor or the Nissan Z, those the manufacturers can't make those fast enough to satisfy demand. So that's why you still see those cars selling for 20 grand over, 40 grand over, X tens of thousands of dollars over MSRP. So just because most car values are probably going to start going down doesn't mean there's not opportunities in the market in the coming months, because there's always going to be opportunities in the market. You just need to know where to look for them. If you guys, I think at this point we'll probably wrap it up. Just a quick reminder, go check out buckedupsubs.com. This is my favorite pre-workout, which is Woke AF, and it's the America Pop flavor, like the the Rocket Pops that we used to eat when we were kids. At least I did. Again, this is the pre-workout I've used consistently for like 4 years. Maybe you use it a little too much, but I've brought it everywhere. I've brought it up here to New York. I've brought it overseas on multiple Army deployments. I have brought it a lot of different places because I like it that much. So go check that out. Link in the description, link in the pinned comment. If you guys liked this video, I know it was long, but unfortunately it was kind of a comprehensive warning, no matter what situation you're in, so that you guys, in a month or two, when you start seeing these signs that are more overt in the car market, then maybe you guys can say, oh, okay, yeah, he was right, and maybe, you can make informed decisions on it, or maybe my next video you guys will take extra seriously, and maybe that can save you some money or make you some money in the future. I'm going to jump on here and start making a couple other videos, so till next time, stay safe out there, and I'll see you guys for the next video.